Hey traders, let's take a moment to thank and feature one of our top sponsors, FX2 Funding. If you're looking to get funded, listen up. FX2 is offering traders the chance to trade with up to $200,000 in simulated capital and receive up to 85% of their results. If you're interested in getting started, use the link being dropped in the chat or the link down in the description below. If you pass the evaluation, you'll receive your feedback and gain access to your new account. FX2 allows traders access to a wide range of assets and allows traders to hold their trades over the weekend. FX2 is giving A1 Trading Show fans 15% off the evaluation fee if you use promo code A1Trading15. So if you'd like to learn more, again, use the link being dropped in the chat or the link down in the description below and use code A1Trading15 at checkout for a discount on any of their evaluations. Now back to the show.
All right. Good morning, traders, and welcome back to the second main event, I guess, of the week. We had the FOMC meeting earlier this week with Jerome Powell, which I would argue is probably the main call to action here, the main event, main card, I guess, for the week. However, NFP is still probably a very slim to close second. Today, we're going to get some jobs data, and I am very, very excited about this to see what it's all about. What is the labor market looking like? Because, you know, I saw some tweet and I couldn't help but laugh because it was something that was like saying, you know, most traders who stream these events, they don't actually even know what these events are telling them about markets. And I was proud of you know, this community because we do pay attention to what these events actually mean, not just the price chart reaction, but rather what these jobs numbers are actually going to tell us. And we're going to have that breakdown here for you in the next 15 minutes. We're going to get the jobs numbers, we're going to go through them together, and we're going to tell you what they actually mean for markets, not just watch a fancy spike. And again, although the spikes are fun, and I admit this is why we have the big screen here so that we can watch all of the charts at the same time together. That is a lot of fun. The NFP event, or the employment change, the wage growth data, you know, all of that is going to be really, really key in what happens next for financial markets. So should be a real big day, and we're going to get into it here right away. So quick look at the S&P. So huge shoot up on the stock markets last night. If you're wondering why, I prefaced it in my video yesterday, just how important this last evening was. What we had was Meta, of course, you guys know Facebook and Instagram. We had Apple, right? And we had Amazon all deliver their earnings. And for the most part, it was a rock star evening. Apple kind of disappointed, which is nothing new. Apple's actually been having some struggle. It's getting challenged as that unbeatable stock right now, that's for sure. Regardless, why does this matter to you? Because we don't really talk and trade stocks on this channel, but we talk indices all the time. We talk currencies all the time. We talk gold. We talk the dollar. Well, this stuff matters. This is our risk on or risk off indicator. If company earnings are real strong, that's telling you something about the markets. Okay. Anyways, that shot the stock market up like crazy. It went mad in the evening as the NASDAQ tech stocks flew. The Russell got a nice bounce, which if you guys remember, I sold puts on the Russell. So that position is looking pretty good here today. Though admittedly, I am a little bit disappointed because I was looking for that S&P and NASDAQ to pull back a little further to get my entries. And I would be lying if I said that I didn't feel a little frustrated with that move that happened, because I felt a little left behind. I made money on the move, but I didn't quite get the position that I was looking to get into. It happens to the best of us. I'm not the best of us, and it still happens to me, right? You know, I'm not perfect. I'm not the greatest trader of all time by any means. There's always more to learn. But understanding these moves is really important in trying to set yourself up for the next one. So let's do that together. Let's jump in. Okay, so again, indices were up overnight. The dollar index can't seem to make its mind. And maybe we get that changed finally today with NFP coming out in 10 minutes, guys. We're going to see what the labor market's looking like. And if that labor market, I'll say this right now, if that labor market comes in cool, these markets are going to go higher and this is going to go lower. right? If you get a disappointment in terms of jobs data, or I'm sorry, not a disappointment, but a real cooling in the labor market. So yeah, maybe a disappointment in labor. It's going to cause that dollar to probably break the lows. And I'm not saying that that's what I think is going to happen. I actually have my conspiracy theory. If you guys have been watching me, I think the jobs data actually is going to be a little hotter than expected, purely, and that's not actually my. Let me back up. Based on what we heard from Jerome Powell on Wednesday, he seemed pretty cautious about rate cuts in March. Part of me wonders if maybe all of their, conversations and data that they're seeing coming in about the jobs market, about the labor market, about the inflation, story, maybe they have some cautionary tales, and maybe that could be jobs data could come in hot. That's my guess. However, let me also preface that with, I am not trading before the spike. That is gambling. We do not know what the numbers are going to be. There's no what's the NFP signal for the day. That is pure gambling. And if you're saying that sort of stuff, close it up, put it up in a wrap it up in a cardboard box and throw it into the dumpster, because that thought process is gambling, and there's no other way to say it. Trading a news spike and guessing what's going to happen on the actual release in the moment you do it, your spreads are going to be massive and you're going to lose a ton of money. It's gambling. There's no beating that, because you and I, we do not have, some massive computer quant system that's chugging through all of the data to come up with forecasts. And guess what? Even the guys who do have those systems, Goldman Sachs, JP Morgan, they get it wrong too sometimes. So the point is, you can't predict exactly what the news numbers are going to be. And that's foolish to try and trade the spike. So again, if the greatest in the industry, the smartest minds, the greatest PhDs with computer science degrees and everything, if they can't perfectly predict the news, you and I certainly cannot, just based on candlestick charts. Okay, let's be real for a second. That's the first part. Second part, how do you play it then? What do you do with news? Well, you interpret it and you see what the numbers are, and you trade the trends that could form after. That, in my view, is the wiser way to play news. Okay? So here's the thing. Let's go into some individual charts. We've got 7 minutes to go before we do get the number. The real fun starts once we actually get the number, because again, that's where we'll see some volatility start to kick up, and that is also where we'll get some volatility that we could potentially trade if truly the narrative changes. Now, again, here's that big run up on the NAS. That was, again, due to Meta earnings. Did you guys see Facebook? I mean, Meta. I've traded stocks in the past. Well, I've invested in stocks. I've never really been a super active trader of stocks. However, I pay very close attention to individual stock names all the time. Even though I don't trade them, it's because this is a market that is very important to global markets as well. These companies are massive and they have huge impacts on the global economy. Look at what Meta did yesterday. Holy crap. That is wild. Look at this. Massive push. Guys, that move right there that you're looking at, that beautiful candle to the upside, that is 17% gains on a massive company. What a wild move. And again, shout out to anybody who owns Meta. I used to own it. I texted instantaneously my good friend who we've invested together for a number of years. Just, we shoot each other texts and talk about stocks and stuff. But yeah, we talked about, I instantly told him I'm feeling mega regret for selling my shares. However, I did buy them in the lows of 2022, if you're curious. So yeah. And then I sold it way too early. Yeah, anyways, let's take a quick look here at things like gold for a second. So gold is sitting at resistance. And again, if you are a gold bull here today, if we get some real cooling in the labor market today, it's probably going to be what could take gold through the highs. If we do not, this rejection starts to become a little sketchy, because you're going to get real quick, guys, as we go into this jobs data, you're sitting at a resistance point. This resistance point is either going to look like a 500-pound beast sumo wrestler that can't be beaten, or this is going to look like rainbows and daisies compared to where price could go. Because again, if that, my point is, it's either going to look real cheap or real expensive in just a few minutes, because NFP, the data that comes out will tell us if this labor market is hot, guys. Guess what? gold is probably going to struggle in that environment because the Fed's going to keep rates higher for longer, and that is not what gold wants to hear. If you want to see gold fly through the highs, you want to see those labor market stats to come in real cool, show the economy is slowing down, that rate cuts are coming, and that even possibly a recession could be coming sometime in the future. And that is the story for gold bulls, right? We'll see if that happens. Okay, take a look at the dollar index here with me. So the dollar index has been continuing to trade in this range. And although we are slightly below the bottom of my zones drawn here, we do still have some real strong support here. And so I would just be careful as we go into this news event. Don't get too hyped one way or the other until you start to see the numbers. We're just about 4 minutes out. We will be watching the reaction here live on the channel. And I do also want to mention some things here in terms of top setups for the Edge Finder. Let me go ahead and look at this. So this is our algorithm. What it does is it looks at all sorts of data. And what we're going to be looking at here, guys, the labor market stats are going to be updating today, which if you're an Edge Finder user, these are all going to likely see some tweaks to their scoring based on the labor stats we get today. If you get hot jobs numbers, the dollar bullish setups are probably going to come screaming in, right? We're going to see more bearishness on euro dollar, right? Because labor, if you look at the comparison of euro labor versus US labor, it's like the score is 0. So what that means is that if you get real hot labor stats at the US, it could tweak that score and we could see some stronger reads. And vice versa. So it's all about the labor market calculation here today. Again, the Edge Finder will pull in that data automatically and give us a bullish or bearish read that then we can use as a potential setup. We got NASDAQ as a bullish setup. I've missed that move and have been kicking myself every 30 seconds about it. But I'm trying to be patient. I'm going to stick to the rules. But yes, these are your top setups here for the day. We'll continue to watch this real close as we get closer to the event. And yeah, so after the numbers do come out, we'll be breaking this down and we'll also consider what the Edge Finder has for us. If you don't have a copy of the Edge Finder, I just want to say here as we approach the news, we've got a couple minutes to go. Please note, today is the last day of our 45% off sale. If you're not sure what the Edge Finder is, please feel free to message us using the link that's in the chat right now. It'll be a way to direct you to a conversation spot with a real person on my staff. We're a software company out of Atlanta, Georgia. We build this data, these tool sets for traders. You can look at the COT data, bank forecasts, retail positioning, smart money indicators, AI, investor sentiment, put calls, seasonality, economic growth, labor market stats, inflation data, and an algorithm that pulls all that data in, computes, and sets up trade ideas for you. If you don't have the Edge Finder already, today's the last chance to get it for the massive 45% off sale. It ends today. If you have not taken advantage, please be aware we are raising prices on the tool, and that is your fair warning. This is our fair warning sale. We're raising prices. We're restructuring the tool as we've invested a lot of money. Maintenance costs have come up. We're changing around the way we do it. Today's your chance to get it for cheap before that price hike. Okay. All right, guys, let's not miss the news here today. We've got about 1 minute to go. And what we're going to do here is, like I said, we're going to go to our all markets page so that we can watch the spike across everything. So you got your indices for my indices friends. Love you right here, right? If you take a look at the dollar index, here's the dollar index. I'll be watching this one. The euro, the pound, you've got the gold market and the oil market all in sync here. So we're going to watch all of this here. We're about 40 seconds to go, and then we're going to break down the numbers together. Please be very careful. Please do not gamble on the spike. I'm telling you, it's not worth it. You're going to learn a hard lesson. Otherwise, you'll just have to learn it yourself. Anyways, 30 seconds to go. We'll watch the reaction here, and then please do not go away. We have a lot of times people will leave right after the spike. Don't go anywhere. I'm telling you, the analysis and the setups come after the news spike. Bear with me. We're coming in for breaking news. All right, guys, and let's watch the reaction here. Data should be dropping any second now. All right, we're seeing a bit of a reaction here so far. The dollar index is slightly higher. S&P pulling back, NASDAQ pulling back, euro, pound pulling back. The US 30, gold is down, just lost about $15 an ounce on that move. Oil continuing to chug lower, pound dollar lower, S&P, NASDAQ, both of these coming in lower. Wow, we got the hot data. Somebody said 353K. Wow, look at this. My conspiracy theory was right, guys. Clip that, Chandler. That is going into the socials. The conspiracy theory was right. Oh, that's going to be a fun edit today, Chandler. That's going to be awesome. Okay, yeah, that is a hot print. Wow. We just got 353K. Average hourly earnings came out way hotter than expected. Unemployment rate came down. People were expecting it to go up. Oh my goodness. That is a huge change in mindset. Now you might hear I'm a little excited. You know exactly where I'm going with this. Come on, baby. Give me a chance. I've been wanting to buy the NASDAQ on a pullback, the S&P, even the Dow maybe. But look at the dollar. The conspiracy theory was right. If you guys heard me say my conspiracy theory yesterday, I pointed out that I think that Jerome Powell sounded in his speech like March rate cuts really weren't coming. I read that as maybe the jobs data comes out strong, and that's really what they're pointing at. Well, there it is, guys. You couldn't ask for a stronger read. 353K. Every area that we look at showed us dollar strength here and pushing back on interest rate cuts. Wow. Wow, wow, wow. That's crazy. Yeah, I mean, I got to say, I predicted it, but not really. When I said that conspiracy theory, I was kind of saying it as a joke, but it looks like it was not a joke. It looks like we really got some hot data, and that throws a loop into things, guys. Wow, 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 wow. Fundamentals, man, I'm telling you. Do not sleep on fundamentals. Do not sleep on them. Now, you might say, well, Nick, if you're so good at this stuff, why are you so surprised you're right? It's because I didn't actually know, right? I was saying that was my speculation after listening to Jerome Powell. Maybe the jobs data comes in hot. To claim I knew that this was going to happen is kind of a joke. But here's the thing. This is something we can now go with and take a look at markets and we can say, okay, what does this leave us with? Well, the dollar index is probably going to scream on the edge finder today. It's gonna scream and howl because this data is about to come in as like a big check mark for dollar bullishness. And we had FOMC that was arguably less dovish than what the Fed was expected to be. I think the dollar moves higher from here. We'll see if that's correct. What I'd be looking for would be a breakout of these highs. Again, that's a big ask because this range has been very, very, troublesome for both bulls and bears. But remember what I was saying just moments ago. Don't count the dollar out until it breaks this range. And that goes for both cases. If this reverses and we trade back under this, I've been clear that I will be the first one to say I'm wrong and, be aware of that. But so far this week, we have been very spot on with what we were expecting. And it was not always the consensus. We weren't just expecting the consensus as everyone else. We were pointing out that we think we're going to see a less dovish Fed. Frank and I ranted on that consistently. We got that one right. And then for fun, I threw out my conspiracy theory, which again, we will be clipping and bragging about all day long. I'll probably put in my videos, brag about it. So I apologize in advance if I'm a little bit obnoxious, but that was kind of cool to see. So anyways, yes, the dollar index here flying high off of what has been a pretty gosh darn hot labor read. Higher than expected. More people got hired, right? More people got hired than what was expected. They revised the previous up. Whoa, I didn't even catch that the first time. How did I not see that? They revised that from 216K. We got like 100 here, let's say 150 here. We got like 250,000 extra jobs accounted for on this filing. That's crazy. And you got average hourly earnings. So people got wage increases. We got more people getting hired. Unemployment rate is lower. And people are arguing for a March rate cut. I'm feeling vindicated right now. Yes. What a move. Beautiful, beautiful dollar pushing higher here. And again, I mean, how do you jump in front of that? That's just a strong labor market read. What I'm going to tell you right now, this is about to get to be a real colorful indicator on the edge finder. Labor statistics here are going to print pretty positive for the dollar momentarily. This takes a few minutes to update, calculate, and we're going to get some pretty bullish reads, I imagine, on the dollar pairs, as well as, I mean, that's remarkable that you get such a strong read here today. And again, justified. This move completely justified. A lot of retail traders, a lot of people who look only at technicals, they might say, "Oh, that's overextended." They might try and short this. I mean, when it first came out, if you tried to short that, you're already in a huge, huge drawdown. But look at this thing. I mean, the dollar index is printing higher, and I have no question to me that I would not be surprised if we break through the highs here. I'm not saying that's a certainty by any means, because again, markets can be tricky. However, I wouldn't be surprised if we break out today. That's a huge, huge labor print. And I know I just keep repeating myself, but you got to understand that changes a lot of probabilities. And I bet let's go take a look at some other markets, because I'm stuck here on this. NASDAQ down, S&P down, the Russell getting hit, which not great for my one position. I sold puts on this. Granted, I sold puts like down in the lows, which was awesome. So I sold puts at a great time, but still this thing is getting wiped back down today. NASDAQ down 0.66, S&P down 0.5%. The Chinese market, the Japanese market down slightly. The dollar index, just like we said, just massive. VIX slightly higher here on the day. The gold market getting slapped down again, as exactly what we said. Remember, if that labor market comes out hot, gold starts to look real expensive. Well, there it goes, right? Looking real, real expensive all of a sudden. And, watch this level of support. If that breaks under, we talked about it. We may have been early in this idea in the last few days, but if we break through that, we could be heading lower from there. But again, let's not get ahead of ourselves, because yes, we already got the move. That if you played that, then congrats on that move. Silver down hard, oil down hard on this one as well. Euro USD, let's take a look at that one. Wow, look at that. Euro dollar just taking a bath there. The pound dollar, dollar yen, look at that, screaming higher here off of this. USD CAD, the Australian dollar, the Kiwi dollar, wow. TLT coming down hard off of this. Again, yields probably jumping. Look at that. Look at the yields, guys. The yields are huge. So what that's telling you right there, you know what that tells you? That tells you a March rate cut is very much going to get ruled out in terms of probabilities. Very, very crazy. What is the point of understanding the fundamental number if you're looking at technicals? Because technicals are just, I say this over and over, and apologies for people who have heard it before. It's the why and when concept, okay? Why is fundamentals. When is technicals. I can draw up all the fancy support and resistance, but I think for me, support and resistance is not my edge, right? Everyone can do that. Literally everyone can draw support and resistance levels. So how are you going to create an edge in that? Where you might be able to create an edge a little bit, not easier, but with a lot of work, is the idea of understanding why a market may be likely to continue or not, right? Is it going to trend from here? And my opinion here today is that we've been bullish on the dollar, and we've been right about that overall, but we've been ranging recently. This today tells me we could see, this is why we could see a continuation in the dollar, a breakout in the dollar. Then we just use technical analysis, our red and green lights, and help manage a risk. Technicals, like I said, technicals are a valuable resource by all means, don't get me wrong, but it's the fundamentals that tell you why markets are doing what they're doing. And knowing why will tell you whether or not there's a good chance that that story continues or does not, right? For example, if you see certain areas of the market outperforming, it can really tell you what the market's, kind of concern or optimism is. For example, if you get gold rallying hard on a day, sure, that's good for the gold bulls, but what is it telling you about the markets? Is there some fear baked in there? Is that why people buy in gold, right? It's very important. That's the fundamental story 101. Quick look at retail sentiment. I imagine this is going to get more extreme here today. Take a look at this. We've got the Australian dollar, 64% of traders are long, US oil, 82%, USD CHF. On the flip side, you have retail traders overall very short biased on the indices and dollar yen. Let's pull up that dollar yen one more time just to take a look at this one. Dollar yen. Yeah, so take a look at the daily chart. Didn't quite get into my setup that I was looking at on dollar yen, but still bounced off of that zone. So nice move there for anybody who did catch it. We're watching that one play out here right now. So dollar yen, this one I imagine if we see sort of some follow through here today, we could see a push back to the highs and possibly look to break them next week. Could be an interesting setup to watch out for. Again, we'll go over here. By the way, guys, for those of you who do use the Edge Finder, remember we have COT data coming out this afternoon. We'll get institutional money flow. What did they buy? What did they sell? We'll get that latest round of data here in just about 8 hours from now or so. So if you have the Edge Finder, make sure to tune in this evening. You'll be able to check out the latest COT filing and see what institutional money bought or sold. This is not guessing what smart money is doing. This is not trying to use candlesticks to determine what smart money is doing. This is straight up what smart money is doing, right? From the source. The CFTC requires big institutions in the US to present, to submit what they have been doing in the markets. And we have that data. Now, it is a little bit delayed, but it's wonderful still for understanding overall market sentiment from professional institutional grade traders. So if you want to have this data, I mentioned this earlier, if you're somebody who watches the show regularly or you watch my videos, 45% off sale is ending today. Today is the last chance to get a copy for 45% off the Edge Finder. If you'd like to get that last chance, boom, there it is. Last chance for big discounts. Before that ends, we are repricing the Edge Finder. We're restructuring some stuff here on our end internally. Our company has been working real hard on just getting tons of new market data set up for us. And, we've got, like, for example, if you're an Edge Finder user, check out the new labor stuff. We got labor market stats, we got economic growth, got PMIs, retail sales. So much stuff is coming to the Edge Finder this year. If you are an aspiring fundamental trader, pick up a copy. I'm telling you, if you've been thinking about it, today is the day. Do not hesitate, because if you wait, the price is going to go up, and then we're going to hear about it from you guys later. So I'm telling you, every time we do this, I'm trying to remain transparent. We are planning to restructure our pricing. And if you've been thinking about getting the Edge Finder, don't wait, because then you're going to be, you might be frustrated by what we change around. We might limit certain features that you wanted to get. So, if you want everything, get it for 45% off before that sale ends today. Again, way to do that, just chat with us right there. All right, let's see what else is moving here. Take a look again at the top setup, see if we got anything here. We got dollar yen back up on top, dollar Swiss, there it is. NAS 100 still bullish, but not quite the +8 and 9s that we saw. Aussie dollar, Kiwi dollar, those are ones to watch as well. And again, just to look at those numbers there today, that is a smash hit in terms of the data. And again, let's go take a look at that dollar, see if are we up at the top of that range? Not quite. Actually, on the 4 hour, I think we are. We've just barely, briefly, we're there. And again, watching this candle will be very interesting. But I imagine most likely we're going to get a strong close overall, because that, again, is just a smash hit number. Despite that, though, we do see indices being resilient here. S&P bouncing back slightly. The NASDAQ did make some corrective moves and then bounced slightly off of that. The Russell, same thing, which is good for my position. I did sell puts on this one, as I mentioned earlier, so that's okay. NAS 100, US 30. DXY, we'll keep watching that one. Gold did come down to support. Let's see if we can bounce here. Be curious to see how this reacts going forward. But again, this tells me, for now, it's tough to be a gold bull with that data. That data is just so strong overall in terms of, like, okay, your labor market is super strong, so they're probably going to be concerned about inflation for a longer period of time. If you get data prints like that, I mean, they revised last report's data higher, and this one was also hot. So all that said and done, the market's looking screaming hot. And that's going to be a downward pressure on gold for the time being. So really, really interesting. Take a quick look at oil here. I just want to see oil on the weekly chart really quick. Oil will be interesting to watch. I'm actually surprised we're not getting a little bit more of a bounce out of that, because that labor market shows just how strong, again, the consumer could be and how strong the economy can stay in that situation. Again, a real story here is yields. Look at that weekly chart on the 2-year yield and 10-year yield. Bitcoin, just for namesake, down a little bit here today. And again, look at the euro and the pound. Those ones getting crushed here today. What is that in terms of pips? Let's see. 70 pips down on pound dollar. Wow. Dollar yen moved 99, 100, 103 pips. That's huge. Really, really quite surprising. All right, guys, we've got Kenzo here. He's going to be joining us on the show in just a moment. Real quick, we're going to thank our sponsors here on the show that make this possible, and then we'll be jumping back in with Kenzo just after this.
Attention A1 Trading Show fans. If you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker Eightcap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to Eightcap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now, back to the A1 Trading Show.
All right, guys, and we are back with Kenzo. Hey, Kenzo, how you doing?
I'm doing great, thanks. And you, man?
I'm doing real well. And Kenzo, wow, what an NFP number we got out of today. I mean, that is just in my view, I don't know that there is a more red hot labor market read than that. We had all 3 areas, including revisions, just real strong. I'm just going to real quick go through them, and then we'll get your reaction and what you're looking at here today. So average hourly earnings. This was a big one for me, as this would sort of be your inflationary component that's in there, right? If people are getting,
Yes.
Price increases, that contributes to everything else. But anyways, 0.6 compared to 0.3 expected. That is a huge, I mean, twice the number that we were expecting there. Employment change, we had 353,000 jobs compared to 187 expected. But the big one here too is that the revised the previous report from like, what was it, like 216 to 330. So we just found another 115,000 jobs on the revisions of the previous one. At the same time, they were expecting unemployment to actually tick up, and it didn't. It went to 3.7% or stayed there. So, just a smash hit for the dollar, I think, here today. What's your reaction to this? What are you thinking about all this?
Yeah, it's crazy, man. I wasn't expecting that. Obviously, I thought maybe we're gonna see some weaker numbers. Even though now we have the opposite. I never thought maybe the numbers were going to be as bigger as this. I thought maybe the difference won't be that much. So yeah, it shows that the dollar now is going to go stronger, and it's not what we were expecting. But I like the way the market was set up. Everything was actually lower on the side of the dollar. So we were on a support area. So it makes sense. When we take the other pairs, they were on the resistance. So it did make sense. But I still believe that I am not expecting to see the market breaking some crazy resistance here and there. I don't think that is going to change the overall structures. I just think maybe this will be for now. Then we will start to see some reversals.
Interesting. So you think that the resistance there will continue to hold for dollar index? Is that what you said? Or did I hear you wrong?
Yeah, I think so. I'm not saying that it won't break, but the way I see the market, let's say if maybe I go on other pairs like let's start with maybe GBP. On GBP, the market is still on a very nice uptrend, you see. So I think we will see this type of a reversal, but maybe around this support area, we might start to see the market pushing to the upside. I think looking further, that will actually we will start to actually add like interest rates. We know that they did not really go well or the way we thought, but along the way they're still going to cut the rates, and that is actually good but bad for the dollar. So this might be a short period. This will just happen now. I don't think this will change the trends. So the market will actually react positively for the dollar for now, but I don't really see any change of the trend. I don't think dollar will be stronger for the next week or 2 weeks. Only now this one spike, I don't see it breaking here. I might be wrong. Next week we will be here. We will see if maybe I will be right or wrong.
Sure. Yeah, no, well said there, Kenzo. And again, I think you brought up a good point because, this week we also heard from the Bank of England, and the Bank of England sounded a little bit more hawkish than some people might have expected. They do something where I'm sure you've probably seen or heard this before, but for the audience, the Bank of England, they vote. There's like 9 people on their committee there that vote on where they think that what they should do next with rates. And you know what? I'm going to pull that up so that I'm not just speaking off the top of my head. Let me actually look at this. Okay, so Bank of England, right? When you're talking about the pound US dollar, here's what we thought was going to happen. We thought we were going to get, I believe this is hold on, let me just make sure. So the first number is how many MPC members voted to increase rates. The second number is how many voted to decrease rates. And the third is hold. So increase, decrease, hold. So on this one here, we were expected to see 2 people say increase, 0 people say decrease, and 7 people to say hold. What we got instead was 2 people said increase, 1 person said decrease, and 6 people said hold. Actually, I said that wrong. Perhaps they were a little bit more dovish than expected. However, the Bank of England is expected to cut rates. The ECB is expected to cut rates. So I guess the question, if you're a currency trader here today, is who is actually going to be the first one to cut rates? And I guess part of the reason here for this move lower on things like euro dollar, pound dollar, is because now, with that labor market coming in so strong, I guess the possibilities or the when that rate cut's going to happen in the US might have just got pushed back a little bit. However, we may, like you're pointing out, maybe next week we hear something from the ECB that says, hey, we're still seeing, a serious concern about, inflation overall, and it could change the story again. I want to also ask you a question about gold here today. The dollar index screaming higher. Obviously, you can see has a negative reaction to gold. These two are sort of mirror images of each other right now. Do you think this is a pullback that actually could bounce for gold, or do you think this is a bigger reversal? What do you think?
Yeah, on my strategy, I think that it's actually a good one because we had the market was already on our resistance area. So this reversal, it's actually welcomed, unless if maybe we start to see a breakout on the support, because the target is actually here on the support area. If it reaches that support area, it's where I will expect to see the market pushing up. I still believe that the dollar is still on the bullish side. Just because of NFP, yes, the market will react to that maybe for 3 hours, 4 hours, then the market will go back to normal. So I still believe that maybe we're still going to see some nice bullish momentum going further. So, and on the rate cuts, I think GBP or Europe or any other country, actually they are all waiting for the US to do that first. So after that, I think we're going to see them trying to follow whatever that the US is doing. Remember, They have this community. I don't know if maybe you're aware of that. They have this, they call it by the name, but it's not actually interest rates. They have this name before they introduce the rates. They have these meetings where mostly it's like all over the world, those governors, they go there. They call it with the name Philadelphia, whatever.
But I know what you're talking about, but I can't think of the name either. Does anybody know the
Yes,
name that we're talking about? Drop in the chat if you have it. It's like
yes,
a big committee. Yeah.
it's a big meeting there where they talk about the rates, but it's not actually a FOMC meeting, but they
Right.
just talk about the interest rates. So they invite all these governors from all over the world.
Yeah.
So obviously you can see that they are doing the same thing. Most likely, if you check the economic calendars, mostly firstly is going to be US interest rates, then secondly you will see GBP or Europe or the other ones which are not really that big. So you can see that they're just doing the same thing,
Sure.
mostly just like that, and they will follow that. If you checked before, when US was increasing the rates, every country was doing the same.
Hmm.
And it's understandable. US is bigger economy, so you have to follow the boss, because if you
Sure.
choose a wrong way, it means you're not going to perform very well.
No, that's a really good point, Kenzo. And again, they certainly look at one another. And to your point, the U.S. economy is so large. It's so especially for their Western allies, which is mostly what we talk about. We talk about the Euro region, we talk about the UK, and so it
Yeah.
does have a massive impact on its trade partners there. And yeah, I mean, I guess Kenzo, my question here is I don't know if you saw, I know we talk indices a lot together, and we even talk sometimes individual stocks. Did you see Meta's earnings?
Wow, that was crazy. I saw it was pushing up, but I think it's because they were talking about dividends. I think it's the first time they
Yes.
are going to
Mhm.
have dividends, and that's great for a tech company. So obviously that is a good thing. So I saw it was pushing up, but I never saw the numbers. I just heard they were just talking about the dividends and stuff.
Well, they had
So and
smashing
that pushed
numbers.
the
They
market.
had, they released their dividend, all sorts of stuff here, and the market just went crazy with it. The Nasdaq tried to push back. It's just a testament. I know we don't talk individual
No,
stocks too often, but I mean, it was up. I mean, at this point, it's up like
yes, yes.
17%, and just a crazy,
Wow.
crazy move. Same thing with Amazon. Amazon also, I think it was up 6% the last time I looked at it. Yep, there goes 6% on the day. And these are big companies, and they really, as crazy, we're talking about this leadership concept of, the U.S. leading, a lot of their Western allies. In the
Yes.
stock market world, if you're trading indices, these companies lead your indices big time. These
For
are
your
major
structure.
weight. Yeah.
Wow, that's great. That's crazy. So I think after this effect of NFP, we will see some serious move. I think we're gonna see some serious move. Yesterday we also had some very nice push to the upside. Now it's reversing. So for us, it was quite easy to see this, but the positive side that we see from tech stock, that is great. I think Nasdaq did not really react to that. I think that is still coming.
Yeah.
So maybe next week we will see some proper moves, and that is the first thing that I'm still expecting. But whatever that Meta platform did, I think it's the first time, right, for tech stock.
First time they're releasing a dividend. Yes, that has been a unprecedented, and just goes to show that company has so much money. They've already been doing share
Oh,
buybacks, which means they buy their own company shares to
yes, yes,
enrich
yes.
their investors. Now they're offering a dividend. That's just how much money that company is making. What a remarkable company. And Kenzo, I have to tell you this. This is my painful story about Meta. I bought it. You could not have bought it at a better time. I literally bought at like $100 a share, and I sold it
Yes.
last
Wow.
year, like here. So I left so much on the table here, and I'm definitely kicking myself over that. However, um,
Yeah, but you did eat
that's
there.
of
I think you
shareholders.
did eat.
Yeah.
I think you did make something there, because from where you're showing me to that point, it's like double what happened now. From where you stopped to now is actually the double the price,
Yeah.
especially when it was struggling. You remember when they lost 20 billion within
Yes.
28 hours? Or yeah, that was crazy also. So, and it's recovering aggressively. That
Yeah.
this is actually good.
Yeah. No.
I
And
think
and
sometimes
again,
we should talk about these stocks, because when you trade Nasdaq or US 30, you're actually trading the stocks. So
Yes.
sometimes we can pick the ones that they are performing very well, then we can just check them.
Yeah, no, that's a really, really good point, Kenzo. And again, what a remarkable day in terms of NFP numbers that came out today. We've got another guest that's going to be joining us here just after yourself. So I want to thank you for coming on, and I know you're a busy guy, and it's your weekend time. So thank you very much for coming on and spending some time with us. I do want to say, somebody asked, what's Instagram, Kenzo? What's his Instagram? You can find all of his socials on his channel. We do have, there it is, extra_hot_forex on Instagram. And also, if you guys would, please make sure to go subscribe to Kenzo on his YouTube channel. Again, our guests are volunteers. They come on to help out with this show. And in return, I ask that you guys go show them some love on their content. Kenzo's got great stuff on his channel, so make sure to check that out. Kenzo, thank you very much for coming on, man. And we will see you next week.
Thank you very much, man.
See ya. All right, cool. Yeah, no, always good to talk, Kenzo. I love that Kenzo and we really both love the indices, and so that's always fun. We get into some individual stocks. Pulling back here today with all of this volatility, again, could not have asked for a bigger smash hit for the dollar on that NFP. What a wild week it's been. And the crazy thing is we still stay in this range. Despite all of this volatility, we're still in this range. I'm watching for the breakout. I think next week we possibly could have it on the dollar, and I'm watching that very close. To help me with next week, we're going to bring in the heavy hitter himself. We're going to bring in Ivan FX. He is our a mentor and coach within the A1 trading community. Of course, we have him in Discord. He does our coaching webinars, and he's a regular contributor to the A1 trading show. Ivan, how are you, sir?
I'm doing very, 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 very well.
Yes, I can imagine you're having a good day with this dollar pop here. What are your thoughts? I mean, there's nothing to say here. The jobs numbers were just rock star.
You're the one that is informing me right now, but I can see what has happened. I'm just joking. I saw numbers absolutely crazy, but what is crazier, I think, yesterday was the drop in dollar all of a sudden. I honestly don't know where it came from. Was it the Meta ones? Was it the consumer confidence? Some kind of economic data. I don't know why dollar becomes so weak so fast, but that was more crazy than today, because this is what I expected. This is what's in my plan.
Yeah, no, it was weird. Yesterday's drop in the dollar was strange to me. I didn't really truly understand exactly why it was dropping so hard. I mean, we had all that Fed commentary, sounded pretty hawkish to me, and then it was just like, boom, dropped all the way down. But I'm with you. Today, we're back on the right page, I would say. We have a hot jobs data, and as we speak, we may finally be seeing this dollar range get broken out. Again, we're going to have to watch to see how these candles close, but we are seeing what I would say is a logical reaction to these numbers.
So my week so far, I sold euro dollar at 108.24. I closed it, and the next day it continued lower. So I was a bit down, and then yesterday it went so far quickly. I was like, oh, I'm happy. Yeah. But then I was like, how do I sell this thing? Like, I need a big number out of NFP to be able to do anything. And, I got what I want. Yeah. But to me, it's been a roller coaster. I think I said that a bit earlier. What a 24 hours. I was dead short half a day ago that ball out was better than me of reading the market. But I feel like we are half and half at this point.
Yeah, no, I mean, my frustration recently, as I've been saying to the audience here a couple minutes before you were on, was I was so ready to buy the NASDAQ finally, and we just reversed, and it was those great earnings out of Meta, Amazon, Apple was kind of lackluster, but I think we actually, I could be wrong, but I believe Apple beat on revenue for the first time. The point is, we saw some huge moves back up, so I felt a little bit left behind. But with this data, I am feeling okay that we still may get another shot on the NASDAQ and the S&P. If again, this really does contribute to that, March rate cut kind of being pushed off the table a little bit further. I mean, there's clearly some real, strength in the labor market. And the big one for me, Ivan, is that wage growth and unemployment rate both were stronger than what was expected. I mean, what do you make of these numbers? What sticks out to you the most?
The volatility in the NFP numbers, because in my books there is like 50,000 more higher or more. It's like that will make a big move in the market. So today we have, if my head math is correct, 170,000 difference.
Yeah.
It's a lot, and we have seen that, and I spoke to Joe the other day, another Joe, Joe Boss, and he said that what research should do now is, yes, we had volatility in NFP number, but then there has been record high revisions. So not only are we off, not only is the volatility in the actual number, but also the actual number might actually not be what it actually was, because it's revised the next month. So, and that has a lot of volatility. And so what we know, because NFP is calculated out of a pool and then magnified, and once it start doing more digging, they find, oh, it was a bit different. So in a sense that I don't know if we can trust NFP number anymore. I want to put that uncertainty out there, but nevertheless, this does not support anywhere close to rate cuts in March. March rate cut is dead as, I don't know. That was a cat, but it's a dead fish in the water.
Yeah, it's having a tough day for sure.
Yeah. So, and then I've also seen in social media lately, there has been layoffs, or there is many companies now saying they have record profits, but they are laying off a lot of stuff, like IBM and stuff. So, but that's not there right now. So I'm a bit in shock, I guess, because I'm fed with one type of information, and then the actual numbers are completely opposite.
Sure. Yeah. And I think a lot of the layoffs that I've been hearing, just sort of anecdotally, a lot of them are tech stocks, tech companies. And of course, tech is all about automation. And so that there's inevitably going to be some job losses as tech continues to progress. It's kind of the craziness of it. It's like, you helped us build this new technology and it replaced your job. It's like kind of a crazy concept. But yeah, I mean, I was curious, Ivan, what your thoughts are with some of these markets. What do you think about gold here? I mean, gold completely reacted, as expected, sold off hard. What do you think about gold from here?
I'm not going to be pessimistic. I have many comments to do here. One is extremely volatile. It's going from 2030 to 2065, and then back down again, 100% back down again. You need to be very good at your exits, both your entries and exits. This is not a time to be like, I'm gonna YOLO it. And to me, I'm bullish on it. So I saw, nice yesterday, but it doesn't fit with the dollar bullishness. So to me, this is like, this is the standoff. And yet again, I just need for people to really know and really understand and really remember, when I talk about the last push before the fall, that's another one of those end of the trend, and then they just drop on you. So when you see an acceleration in a trend all of a sudden, you should be very, very worried. Volatility, I have given you a shout out. I was happy for you yesterday, but today I'm happy for myself. Secondly, your dollar is not in a range or might be, but it's all about the future, and we have dollar strength coming in. We have euro weakness coming in, so I think we're gonna continue or breaking lower on euro. So at least prepare for that, so we don't be left behind in confusion.
Yeah, fair enough. The euro looks interesting here, and as I'm looking at it, it's right on the cusp of possibly breaking through this low. So this is kind of interesting for those of you guys also watching the euro. You've got this level of support here today, and maybe it breaks it today, maybe it does not. But I would say that this number here today would justify if it's going to break out, to me, a potential continuation. We'll see how that plays. But again, those numbers, that's a real catalyst. And I think that, sentiment shift takes more than an hour. It can take several, days even, if truly we are going to see, okay, March rate cuts are really off the table. And that kind of becomes ingrained in the market. Could take a few days to play out. And perhaps that's where you see, breaks and continuations. And as on the technical side, we could actually look to possibly play it. Gold down 1%, silver down 2.5% almost. You have US oil down here today. Everything seems to be kind of retreating to be a little bit more risk off of this this day. Really, also look at yields flying high on the 10 and 2 year. What a wild move that is. And Ivan, what else other than euro dollar? You looking at any other charts, currency pairs, indices, commodities? What are you looking at?
Well, I went to bed with dollar yesterday, and I thought dollar bullish would be great. So I'm looking for any pullbacks going forward to next week. I am looking for dollar pullbacks on Aussie, Euro, Pound, New Zealand. I don't like USD CAD. So whatever. So this is great. I just want to push back a bit higher so that I can sell at a better price for most likely next week, and that's probably going to be a trade for the entire week of next week. Jens, I want them to be bullish, but it's not really working out right now. It's a bit of a mix between seasonality and fundamentals. So since that's murky, I'm leaving that alone. And then I have seen your oil trade lately, and I'm in awe, but I can't touch that. No, I'm going to lose money if I start doing that now.
I'm a little confused today by the oil sell-off, Ivan. Think about this.
Okay. Yeah.
So jobs data being this strong, I would have argued that it actually could have pushed a little bit to the upside on oil, because that would show, that's the basis of a strong economy, strong demand. So I'm a little bit, well, I guess to be fair, it was already down before NFP, so it hasn't moved that much more. But I don't know, kind of an interesting move recently on oil.
Why did dollar fall? Why did dollar fall yesterday? It has to be expecting lower CPI. And what happens to oil when lower CPI comes in? It goes lower. And then but this one is mostly propped by dollar CPI and what happens in Yemen, and there was no retaliation as far as I can see. So actually, yet again, what drives oil, in my view, when it comes to war, is there an escalation? There has not been any escalation, therefore it should drop back down. But I would say yesterday's drop because of lower expected CPI is kind of like a shot out of the woods, like it's far left, coming out of nowhere, kind of a situation. Yeah. So to me, it makes sense in that kind of scenario. But that doesn't mean that I saw it before it happened. So to me, I'm just explaining what has happened, and then I'm like,
sure. Yeah, no, fair enough. For me, oil's probably on the sidelines for now. I'm looking at things like dollar yen on a possible pullback. Though I tried to catch it here, I just missed that entry just slightly. I was looking for a little bit more, but didn't quite get that one. USD CAD is kind of interesting, though. Again, kind of still on the oil train there a little bit. So maybe not. Dollar Swiss, Aussie dollar. Aussie dollar looks like it might be a little weak here. What do you think about Aussie and Kiwi? Because I know you love those currencies.
Can I just give two? I will go back to Aussie. There has been peace talks agreement, and then I think Qatar said Israel hasn't agreed yet. And then the other one is China growth has by IMF has lowered their projection growth for next year. It is not going to go higher anytime soon. So that also is another one that would sell oil lower because they are the biggest consumer of oil or something in that direction. But anyways, back to your question. I don't like Aussie. technically at the moment. It's in a range. I don't want to break lower lows, but I also want, if I'm going to sell it, I need to have it, I don't know, 65, 60. But it's still a very low ball, weird, bad, I'll slap myself in the face kind of entry because technically it's a horrible trade.
Sure.
But fundamentally, correct. I don't know where to do technically trading this one, just except for just entering and hoping for the best.
Yeah, no, that's fair. I think the Australian dollar against the dollar is if I'm dollar bullish, I do like it, but the technicals have been a little choppy, so maybe come back to that one at a later point. Just checking back in on the dollar index, we are cautiously above this range. However, again, curious to see how we close on this. This candle has this is a 4-hour chart, 1 hour and 43 minutes left in it. If we close real strong above this, that could be pretty key. And I'm going to be watching that for next week. If it closes inside this range, at resistance, I wouldn't say that's necessarily bearish. I would just say that it's pausing and that you watch for next week to see if it breaks out. But yeah, I guess Ivan, if it breaks out, let's say it closes real strong, and we end out this week with just a real strong dollar. What's the first thing you look at on Sunday, Monday?
Selling your dollar.
Okay.
Flat out. And Ballard says watch for correction. That's what I'm watching out for, and that's what I'm worried about. The backlash. But if we have a great close, on the dollar, new higher high 103.90, 104, then current price around 103.7 or lower, for that matter, would be a great place for it to come back and then going higher. I don't like this range. Range breaks out are the worst performing setups that I have. It normally goes against me, so that's an unease that makes me uneasy about it. But what do you call it? Pull and pray? No, hope and pray that if I enter on Monday, it's going to go in my direction.
Sure. Yeah, and also someone in the chat pointed this out well to what you pointed out for us too. Gold had a war premium added in, and so did oil, right? So those are good points about why is gold falling? If there is peace talks, remember that as wild as it is, gold and oil will oftentimes trade higher on concerns about geopolitical conflicts, wars breaking out, supply issues, things like that. But peace talks, generally, good times and optimism actually are a negative thing for gold. It's kind of like if you're, it's like the same reason why a lot of times the people that buy and hold physical gold, a lot of times they're like kind of angry old people. And I'm saying that jokingly because I own a little bit of physical silver. So I'm not totally just bashing those people, but there's a little bit of like skepticism in there. So it's the skeptic's metal. And if it rockets higher, it's usually off of some fear, some sort of concern, some sort of the government's going to lose grips on the economy or wars are going to break out. So the reversal can also be true as well. When peace talks come into the picture, it can really take some of the shine out of gold, if you will. So will be interesting to see that. What do you got, Ivan?
Nasdaq seasonality. Does this look familiar to you? Like that's last year's peak or high in February, and then
bit of a pullback there.
Bit of a pullback all the way until March.
Yeah, so, I know that February historically is not the greatest month for some of the indices, right?
Yeah. So if we can then wait another 1 month and get a much better price, I think that's worth the wait. Just trying to trying to reduce the expectation for the Nasdaq to go higher. Mostly for myself, I guess, because I see it high and it comes back down. I'm like, oh, that's a buying opportunity, bruv. And I'm like,
yeah. And I will say that if the Nasdaq continues to do what it's doing right now, where it's near these highs, but look at this, these pushes are not able to break through those highs. that could be, your cue to exactly what you're talking about. Perhaps we see that final push lower. I've been watching the NASDAQ maybe around 17,000 into the 16s. That would be more interesting to me. I don't want to be the last buyer by any means on this one, and I don't have to be. I can try and wait and be patient on it. And if I miss another leg higher, then I miss another leg higher. But I'll continue to watch that and to try and stay patient on it. Do you like NASDAQ? Or do you like S&P? Which one do you prefer? Or Dow? What do you look at?
S&P.
Okay.
It's more of my favorite. Well, I guess the volatility in it. Though it's nice to look at NASDAQ because it gives you so much profit. But it can also kick you in the leg quite hard. So for me, technically, what I look at right now, at the bare minimum in my mind, I want to see that again. So if that's 4,800, that would probably be a more level that I want to see.
Sure. Yeah, I think I drew this chart for Frank. Let me see if I can show it to you guys. Frank came into my office the other day and we were like playing around with fib extensions, and I thought this was interesting. So I take this swing low, so A, B, C, right? And look at this. I'm sorry, I drew it wrong. It's from this swing. Check this out. Right there. So I went A, B, C, and the 100% extension of this move gets us D. And look at that. We're at the 100%. So we have made this exact move. And so, even if we're just playing historical patterns here, if this move is, if we're comparing these two moves and we're saying, okay, well, then it proceeded to make this move, we could actually measure that really quick and say, okay, there's that to that. And we can go ahead and just take that over here. And there's your potential for a pullback. There's a little fancy drawings, and we get into arts and crafts here and there with our technical analysis, but I do think that's a bit extended and probably due for a pullback. So should be interesting.
We should open an art gallery with the what do they call it, abstract art.
Yep. And just like toss things on our charts and see what happens, and then screenshot it and sell it for $1 million.
So we can reduce our taxes.
Yeah, no. So I thought that was kind of interesting. So, if it repeats itself, 4,400, 4,450, somewhere or I'm sorry, 4,400, to 4,500, that would be kind of your pullback zone if that move were to repeat. So just thought it was interesting.
Yeah, I know. There's a lot of theories but to be honest with you, or serious with the audience, it doesn't matter where it goes as long as whenever it does go down, you're not in the drawdown and borrowing your account, and secondly, when there is a reversal, you're on the ball. So that's all, wherever that is.
Ivan, I don't know, have you ever played around with options at all?
Just in class, just in lecture class.
Yeah. Okay. Yeah. I've sold some puts on the Russell, and if the market sells off a bit, I'll probably sell some puts on other areas. But it's an interesting way to play it and wait for a pullback. You can still kind of get paid to wait by selling options for premium. If this market goes sideways for a while. So yeah, I think it's an interesting one. But I've sold puts on the Russell at let me see. I did IWM. And I sold puts at 187 several days back. So if the market pulls back, then I get a fill. The Russell is kind of an unloved area of the market, relatively speaking. But I don't know. Should be interesting to see how that plays out. But I am in the camp of thinking that this NASDAQ has some room to pull back. And if we do that same experiment real quick, just for the fun of it, on the NASDAQ, I haven't actually done this. But this looks like, let's see, this one may actually, as crazy as it sounds, if we're just doing on that move, may have some room to continue. But regardless, I think the S&P 500 and the NASDAQ are a bit overdone, probably due for a little bit of a pullback. We'll see.
I also just want to mention to you, just to be clear, there is a difference between American options and Euro options. Just
Can you use
just
interactive brokers?
say again.
Interactive brokers, I think, has equities options. I could be wrong.
Okay. Okay.
Yeah, I think
haven't
that's
used
like an
it
option
myself.
for people outside of the US.
Yeah.
Not sponsored, but should be.
Hashtag not sponsored. But yeah, so like there is like when you go into options for that matter or future for that matter, really research before you do anything of it. It's a bit different to Forex.
Yes.
So don't go heaps and toes because I have seen a lot of people making a bang in a buck, some Ferraris out there. But then they also absolutely skilled. So it's not necessarily learning something new from Forex, but it's a different side skill.
Oh, absolutely. Options has a learning curve to it. Like there is some, you're adding a whole nother dimension because you're adding like time decay into your trading, which is complicated to say the least. And a lot of people like to buy options because those are the guys on Instagram that you see like, oh, they just bought, QQQ calls and the market rips and they make like $1 bajillion. Buying options is inherently way riskier and also, well, actually, I should take that back. Both have a lot of risk if you mistreat them. But buying calls, buying puts can be incredibly profitable, but also is, I would say, the harder strategy than having a good sized account and selling puts and calls for premium. So I don't know. Anyways, that's a whole nother topic here to go. Ivan, I'll let you go. Thank you for coming on and walking through all these markets here with us. I do want to say to the audience, if you guys would like to hear more from Ivan, he does our coaching webinars within our VIP Discord. So he does calls with the group, answers questions. Many of you guys, I'm sure, are already listening in to his calls. Make sure to join those if you have not been doing so. They're highly, highly valuable. You can ask questions to Ivan. And if you're looking for one-on-one coaching, Ivan also offers that. He does offer mentorship. So if you're looking to learn new skills or just improve what you've been trying to do, message Ivan on his Discord, or you can find his YouTube channel by clicking this link. Subscribe to Mr. Ivan FX. Ivan, thank you very much for coming on today, man.
Thank you guys for having me.
Good speaking with you. And yeah, we'll see Ivan. He's on regularly. So we'll see you next time, Ivan.
Thank you.
All right, guys. Yeah. And again, real big day in the markets with this NFP number, just rock star stuff in terms of jobs data. Let's see how the markets are reacting overall. We'll switch over to our full view. Let's see. Okay. So S&P pulling back. I'm going to sound like a broken record. I would like to buy it, but I need a bit of a bigger pullback. NASDAQ, same thing. Dow, the dollar index trading just shy of the highs. It is trying, well, near its high of days. What is going on? Do you guys see this? Do you see like this candle has like 2 wicks? That is so weird looking. I've never seen trading view do that. Do you guys see that too? Does it look like that candle has 2 wicks? I know it's really small on your screen, so I apologize. Small on mine too, but it looks like that candle has 2 wicks. The dollar index trading near its daily highs, trying to break through these highs. The pound dollar is down. The euro dollar is down off of this dollar strength. Gold is taking an absolute beating. There's a couple reasons for that, right? Let's see. Wow, look at that wick, guys. I've never seen, it's the fabled magical double wick. It's never been spotted before in the wild. Do you guys see that? Am I just crazy? That's crazy. This candle has 2 wicks. I think it like freeze framed the first one and then the second one, which is the right one? Am I just seeing something? I mean, that looks like it has, oh, it went away. Oh, it's the shadow. See that? It's the shadow behind the word. I got it. Okay. My bad. That was crazy. All right. So oil still down on the day. Again, gold and oil taking a bit of a beating there off of the idea that, well, again, you're seeing kind of some risk premium come out of the market on that front. Let's take a quick look at the Edge Finder's top setups here today. Reminder that the COT data comes out this afternoon, which is going to be your institutional money. What do they buy? What do they sell? I'm very curious for that. That data will drop. You can, if you use the Edge Finder, just click that data around maybe 4:30, 5 o'clock US Eastern time. You should have that there. The pound Aussie, the bond market, we've got pound NZD, USD JPY. Really interesting here. Aussie dollar, lots of Pacific currency pairs getting bearish reads. Aussie Swiss, Aussie CAD, Aussie Kiwi, Aussie Yen, Kiwi dollar, Aussie dollar. Interesting. And again, with this latest, today's going to be a big day. The labor market tab is going to change for a lot of things if it has not already. And the COT bias is going to change for a lot of things soon enough. So we're going to get some interesting score reads out of the Edge Finder. If you're an Edge Finder user, keep an eye on the top setups page today. It is likely to be very, very interesting. NASDAQ holding on to a bullish read, but the other two have lost theirs, S&P and Dow. Really interesting. And again, watching how this dollar reacts is going to be key here today. Take a quick look at that DXY one more time. 4-hour view. So again, there's the dollar index. What I'm looking for is, like I said, a break and close above where we've failed out to do so previously. So really it's this level here, the upper limits of my red zone. If we close above that, I would say that's a real good start for dollar index bulls. Because from there, if we get a breakout, and you might get the technical signals like, okay, we got breakout, possible pullbacks, retest continuations, and maybe, just maybe, we start to see some follow through on this dollar move. We've been range bound for like a week now. So, well, even longer, truly. It's been 2 weeks. We've just been ranging on the dollar. So maybe finally we're starting to see some form of a break. With that said, guys, that's going to probably wrap up the stream. What a wild one it was. We had a monster day in terms of jobs data, absolute rock star data. And I'll have a video up for this. I'm going to go right away after this, go plan a video, put it together, and recap everything for you guys. If you enjoy my work, if you enjoy our audience, I'm sorry, our audience, our guests, and the work that we put on for you guys as an audience each day, I want to ask you to do me a quick favor. It's free to do. Hit that thumbs up button and subscribe to the channel wherever you're watching. And also, I should say this, today is our last chance. This is the last call. If you've been watching our streams, our videos for a while now, and you've been thinking about getting yourself a copy of the Edge Finder, I want to speak candidly. Today is your last chance to get the 45% off discount. That brings the price of the tool nearly half of what it usually costs. And we're calling it like our fair warning sale, because we are planning to restructure our pricing on our product, the Edge Finder. We have so much data in here. We've been building so many new features, and we're going to restructure some of our price models. You can get the full unlocked access to all of our indicators, metrics, and scanners for 45% off today. If you'd like more information about that price detail, if you'd like, payment plans, whatever it is, please make your request by sending a direct message to us using this link right here. And I am saying this, like I said, we're raising prices. I'm trying to keep it real with you guys so that you get a chance to pick up a copy before those prices are different than when you last saw them. Okay, so there's your fair warning and final call on the Edge Finder 45% off sale. Pick up a copy, look at the COT data later today. It is a very, very powerful tool. It's why I use it in all of my daily videos, analysis, and in my personal trading. With that said, guys, thank you very much for tuning in. Have a great rest of your trading day, and we'll see you next time.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.